Friends, the markets continue their steady decline, and Trump keeps surprising us. The trade war has officially begun. The stock market has crashed, losing $10 trillion in capitalization since Trump took office. Today, let's discuss what to expect in April and what lies ahead for Bitcoin. Subscribe. Let's get into it. Trump announced new tariffs, which triggered a market crash. Experts were shocked. He proposed a simple formula: U.S. imports minus exports, divided by imports, then multiplied by 100%. That's the tax rate meant to eliminate the trade deficit. While simple, it could have major consequences. Affected countries are already responding. The EU is warning of countermeasures. China hit back with a 34% tax on U.S. goods and is seeking an alliance with Japan and South Korea. These small alliances will deepen the U.S. trade gap and further weaken its economy. Major financial firms are raising their recession forecasts. J.P. Morgan raised the probability from 40% to 60%, and Goldman Sachs set it at 35%. Robert Kiyosaki believes we're already in a recession, or even a depression. Consumer sentiment in the U.S. has dropped to 2008 levels, signaling a slowdown. With tariffs likely to raise inflation, this could create a vicious cycle. April may become one of the worst months for the economy, as Trump shows no sign of backing down. The trade war's effects are visible across markets. The stock market lost $5.4 trillion in just 2 days and $10 trillion since Trump took office. Crypto is also down. Bitcoin can't break through $90,000, despite many attempts. Ethereum trades below $1,900, and altcoins keep hitting new lows with every dip in Bitcoin. Amid this instability, investors are moving to gold, which just hit a new all-time high at $3,168 per ounce. Now let's look at technical analysis and on-chain metrics. But first, subscribe to my Telegram, where I post all key financial news in real time. On the daily chart, Bitcoin is in a local downtrend, but showing sideways movement between $88,800 and $81,100. We see price reacting strongly to inefficiency zones, imbalances, marked in red, confirming seller strength in key areas. Based on the daily time frame, the likely move is a further drop toward $81,000. On the 4-hour chart, the picture is similar. After finding support in the green order block, the price moved up, only to stall at another imbalance zone after news from China about the new 34% tax. Currently, we're testing this resistance zone. 2 scenarios. We drop from current levels, or we first test slightly higher before heading to $81,000. Both align with current market realities and macro sentiment, as tariffs just kicked in. Fed Chair Jerome Powell said the full impact is yet to be felt, and since countries are retaliating, the blow to the economy might be stronger than initially expected. But it's not all doom and gloom. Arthur Hayes believes tariffs might actually help Bitcoin in the midterm. Investors are pulling money out of stocks. The dollar isn't attractive, gold is at a peak, and Bitcoin could be the alternative. Despite being seen as a high-risk asset, it's holding up amid all this negative news. Jeffrey Kendrick from Standard Chartered shares a similar view. He sees Bitcoin as a hedge against U.S. isolation, something many countries are hinting at. Bitcoin has shown strength while traditional markets tumble. Whales are also active. According to SN, the number of wallets holding 1,000 to 10,000 BTC has reached 1,993, the highest since December 2024. Looking at the cycle top indicator, we're not there yet. The 111th DMA and 350th DMA haven't crossed, meaning there's still room for growth. Though in the short term, the market might dip below $80,000 or even to $75,000 before setting new highs. Let's hope Trump eventually delivers on his promises and helps markets recover. Then we might see new highs for Bitcoin, Ethereum, and altcoins. Thanks for watching. See you in the next video.